Yo, what up, dude? Old habits die cast. What's up, man? How you doing? What up? Chill it out today, man. Talk about AMC. What up, Kevin? How you doing, man? What up, what up? Alright, let's look at Amy, dude. Just doing a Q&A today. Answer your questions, man. Yo, can I sing the Hedgie song live, bro? You know what? Yes, I'll do a little live session maybe in between. Fuck it. Fuck it, bro. Fuck it, why not? What up, man? Jim. Shiraz, Jeffrey. What's up, Stankster? What up, dude? Alright. Yo, Robin Hood. God the Heavenly Father, what's up? What up, guys? How you doing? Okay. Is this a double top? It's a double top if I flip it. Well, it's a double bottom right now is what it is. Or a triple bottom. We're about to come near a fourth test, okay? And this one is very important because typically on the fourth test, you will either get a clean breakthrough, right? So this would be a falling knife, or you get that bounce. Okay, so we got one test here. I'm not going to count this one, okay? Just because it's not as close as these other two. And actually this one is a bit far off, but I think it's still considered on that average. So I would count this one, and this one. And then that fourth one, if we do get it and it bounces off, then we're off to a good start, man, on this bullish trend to the upside, right? So I would prefer if we don't come near it again and we just start bouncing back, but it's still a possibility, man. Typically on that fourth test, you will either get, again, that quick knife fall down, or you get a bounce. It doesn't come back. All right. What are my thoughts next week? Okay, so I use the cycle to track AMC. Okay, so if I bring the cycle up here, we are actually tracking it inverse, believe it or not. Okay, for those of you following the AMC cycle, 62-day cycle, we did track inverse. We have been tracking inverse. It's just the ratio, the height ratio is very small. So it's really hard to tell what the price is doing. Okay, you kind of have to take a bars pattern and stretch it to be able to see what's happening. It's a little tricky here, man, on this cycle. Everything's kind of squished in. It's not as clear as the previous cycles that we've had. So it's really important that if you are tracking it, make sure you grab a bars pattern and stretch it out to the upside. And make sure that things are playing out that way. But right now, we seem to be tracking inverse right here, right? Which means that, and even though you can't see that movement coming up, it's really going to matter right around this tail end, because in the past we have seen AMC really either take a dive down or bounce to the upside. Okay, we've seen both, but yeah, it definitely is a critical point, man. Just because on the macro we do have a possibility of a cup and handle forming still. Okay, I'm gonna take this off for a second. It would be this. Okay, it would be a cup and handle, but more of a double bottom setup than anything. But on the daily, you're probably going to see more of a cup and handle play out here if things do start to come up very quickly. Yo, this late stream deserves a glass of whiskey, dude. That sounds fucking bomb right now, man. What's my drink? Dude, my drink is I like sours. Blood orange sour is a good beer. It's my go-to. I like that. Drink-wise, I make myself something called a caipirinha. It's a Brazilian drink. It's basically freshly cut limes, and you muddle them with cane sugar, and then you add a Brazilian rum to it. It's really good, and you just shake it with ice. It's like a margarita, but Brazilian. Yeah, man, we're chilling. Let's see. So this is the EMA cross indicator here that Mr. Review Dork has pushed out here and created for us, which is really cool. And dude, man, this thing is really good at tracking AMC even. This is the daily chart, and we haven't come close here, okay, on this cross. But in the past, it has moved the price like very drastic. Like right here, man, 36% to the downside. Up here, 30% to the upside. These moves down here are going to be a lot more volatile, in my opinion, just because the price is cheaper. And the setup, okay, we haven't crossed this in a pretty long time, dude. It's been about 4 months since we've last crossed this EMA here, this 1348 EMA. So once we do get close to it, man, this 13 is falling very closely to AMC. So just a small push here to about $19 is would narrow this thing down very quickly. And that is what we're looking for, dude. We're looking for this EMA cross because it's going to be a hefty push for sure. I mean, look at what happened back here. This is when it started. Crossed. I mean, obviously this one was a lot heftier, right? I mean, 600%, but this one is likely to take us to, I would say if we started that cross at like 19, it would probably take us to about 25, rest up before going up again. So do something like this. If we did cross it, right? Rest up right here and then go up again. And then we do create that cup and handle, right? Because we want to rest up along the way before making a larger move up. The slow and steady, okay? Some shine or rum. Yeah, dude, that sounds pretty good too, man. Some moonshine. I definitely feel like I need myself a little drink. Me and Rico, when we play Modern Warfare, or Warzone, we drink it up, man. Drink it up for sure. A little beer. Would 25 be a dangerous zone for shorts? Depends on the time frame. But us coming close to that $25 level here, we would cross multiple resistance levels. Okay, so right now, what we're dealing with is, I'm gonna go the hour here. Take away the EMA cross. So the major support and resistance lines that we have to meet. Okay, so we do have to cross this $21 level, and it has to be a clean break and test. Okay, so if we do come up, we have to bounce off of this level and then basically create another run to stay at support, right? So it is dangerous if you are trading above 25 and you've established that level, right, and created a new resistance on the come down, right? And then you have to test that again and then come up, until you fully establish, in my opinion, the $30 level. Okay, so once you come up to this level right here, that's where you've already crossed 3 resistance levels. So there's one right here, okay, and there's this previous support with resistance, and then on the more macro, I would say this $27-ish level that meets with this low, okay, and then the next one would be right up here, 30. So these 3 have to be they have to be broken for us to be set up for basically, that next leg up. Because you have to think about it this way. Once we come up here, the only thing that can take us back down would be a bearish catalyst. Okay, I don't think that the shorts are going to be able to keep this volume and bring it back down at these levels, because most people that are holding AMC and most people that are going in on AMC obviously want the price to go much higher, and they're not thinking $30. I mean, they're thinking we're talking above, first of all, previous highs, right, and then way above that too. So it's very, very dangerous, yeah, once you get to those levels, for sure. Tickles, what's up, man? Captain and Dr. Pepper. Yeah, I just had a Dr. Pepper, dude. Man, that would have been nice. Captain. Do I think the volume is so low because 90% apes holding, or dark pool? No, I definitely think it's being manipulated, dude. It's the dark pool, 1000%. The fact that there is 90% estimated, right, that of people still having the shares of AMC. Obviously, along the way, you're going to see people sell and then other people pick those shares up. And as long as it's retail, it counts. So the fact that 90% is is still holding is still very bullish to me, right? But you do have to think about the way that sounds as well, right? Because if retail sells and then other retail buys, right, you're kind of canceling out that you're kind of canceling out that trade, because if we're talking synthetics here, it doesn't really matter. You're not really getting rid of or covering synthetics at that point because there's more buyers. So I think that's the beauty of this play, is that, yeah, unfortunately some people do leave the play, but new people come in the play. So it's like a never-ending cycle, really, for that. It's like you're always going to have new apes come in, which is pretty cool. Pretty cool to think about that way. Nufo, what's up, man? What up, what up? RWK, what up, dude? I feel like these market makers are using the volatility of other stocks to drop us by using dark pools to hide our trades. So yeah, I would say they're definitely using the like other stocks to do so. Other stocks, especially in the same sector, AMC or GME, for example. Even though we trade together with the stock, I think the larger, I think it's easier to maintain very similar price action with the stocks that are trading, that are sympathy plays, because naturally retail is also going to look at it that way. It's not just the hedge funds, but it's these drastic moves, right, to the upside that look different, and that is where they trade against each other. So once we get a higher run, GameStop is going to look completely different in the ratio it goes up, and also in the way it comes down, because they are definitely trading them against each other at that point, for sure. Yeah, Stankster, for sure, man. For sure. Let's jump in here to another chart. Here we go. This is drawings I had earlier, but bring it down, take the volume away. I'll keep that up here just for now. Yeah, man, just a crazy setup that we have going on here. We just kind of start from scratch too. It's a lot easier to understand what's happening with AMC, but this regression trend, dude, that we're in, or like parallel channel, is basically a time ticking bomb. Okay, is the way I look at it, because I always select the wrong one, can never get the right one. Where is it? Where is the parallel channel, bro? I'm so bad at this. Okay, here we go. Okay, so this is the parallel channel that we're currently in, okay? It's just two lines, and you can see that we bounced off of two levels, right? We're gonna take this down just a little bit so you guys can see what's happening here, okay? So this channel is split into two channels, okay? We're gonna clone this, and we are going to do that, right? There's this channel up here. Obviously, if I bring it back up here, okay, then we're just focusing out on this channel that's happening down here. But the pretty cool thing here is we're respecting these lines that are parallel to each other, meaning that they're the same direction moving down, right? Like, they're not slanted at all. They're in the same direction, which is kind of crazy to think about, that, you know, things are trading on this zone. But for all these zones, dude, like, we're really just kind of gliding on these support levels, and I think things are like narrowing down very quickly. So dude, a move to the upside or downside, man, whatever way, is almost inevitable at this point. I mean, look at how much narrowing there is going on here, especially on this parallel channel that we took back here from February to right now. I mean, dude, we're just gliding on this support level and really not breaking down or up. We're just trading sideways. So, dude, this is a time ticking bomb. I'm telling you, man. It's only a matter of time before something gets broken and we get first of all volatility to the upside in the short term, and then that slow move to the upside, right? Not anything like that, or anything like that. I don't think that's going to happen, but small volatility and then just stair your way up. Can I do a quick 101 on how GME and AMC trade against each other? Yeah, for sure. I mean, GME has everything to do with AMC, so for sure. Let's compare them both. GME. Okay, new price scale. Let's take away parallel channels. Okay, so this is what I'm gonna do. I'm gonna shrink this guy. So you can tell right now that in this space, okay, right when we fell, I'm gonna bring the cycle as well because that's important here. Right when we fell on November 18th, okay, we started tracking AMC or GameStop almost identical. And this to me was an indication that we're basically, we're headed somewhere in which cycles are merging together. And we see this not only with GameStop, but with crypto as well. So here, for AMC and GameStop, there's something brewing. Okay, because when you trade so close to each other like this isn't like market sentiment, okay? Like this is some dark pool shit right here going on. If things are trading to a T like that, identical. Same with crypto. So what you do is, and this is my theory is that there are stages in the cycle that you can't control, okay? And what I mean by that is like stages that we cannot control, basically where there's more dark pool volume being traded. And I think that this right here, this entire section for AMC and GameStop is locked away. So these shares, okay, are stored somewhere. Okay, I'm gonna say locked away. I think that's better. Locked away, okay? And what's happening here, and this is just a theory, okay? It doesn't mean it's true. What's happening here is that something similar happens when you short a stock, right? Using the option chain. It's not the same as like just shorting a stock and then getting margin called, you know, the day after because like it starts to go up or whatever. Like with smaller hedge funds, these guys, if you're using synthetic shares and like through the option chain, you have more leeway, you have more leverage to be able to basically prolong and move the price in a certain direction for a period amount of time, because the option expiration date is obviously later, right? So you got more time to do so, to play with delta, right? You're trying to delta hedge your position. So right here, dude, you can tell they're tracking identical, but you come back right on this range and things start to look different. They start to look different because, well, you would see one come up and we're talking in the micro or on intraday, you're going to see the price look very similar, but not the same ratio, the same return, okay? The same return on how much. Think about it this way. Like if you're putting $10, okay, let's say you buy $10 of AMC right here, okay? So you just bought $10 of AMC and you bought $10 of GameStop, okay? Right here, you're grossing in the same amount, okay, by holding both, okay? Because they're tracking on similar beta, okay? So if we bring in beta here, and I know this is a little confusing, okay, but I'm gonna do it anyways. We're gonna bring in beta. I think it was this one that I used. Where is it? Input, benchmark. Okay, yeah, so we're going to do GME. And the length is going to be a 62-day length, 62-day cycle. I forgot. I think I put 100. No. I put 512. Okay, 512 because we're looking at this from the macro, right? Where we want to see how much we can compare it from every 512 bar period. Okay, so if we come here on the 4 hour, okay, and we bring the beta up. Where's the beta bar? This one? I might have to take away GameStop here for a sec. Just bear with me, because this is very important. Is there a reason it's not showing it? Oh, okay, I see why. I see why. I have to go on the 2 hour because it just doesn't want to. Why is it not showing it? What the fuck? That's weird. Okay, this is important. I need to show you guys this. I don't know why it's doing that. If I do 100. Okay, so if I do 100, it's going to show me? That makes no sense. I'm trying to do 100. Okay, there we go. That's better. Okay. Okay. Do you see this? So this is the beta on GameStop versus AMC. You see how it's literally tracking identical right here? It's tracking identical, and in the past, it's all like different, right? Because they ran together, and you could. The beta is basically saying, like, how close it tracks to it, on the return that you get, right? Beta is used a lot with the SPY, like an indice, because well, you want to see if you're doing better than the SPY, right? So this is my point. My point is that when you are looking at AMC and GameStop together and how they're trading each other, at some point these shares that are being locked away have to be covered, okay? And I think that the reason why things are trading so tightly together is because, well, they're driving both prices down, and they know that the sentiment in the market is that both go up together, right? They know that if AMC goes up, there's going to be pressure on GME as well. So they kind of have to plan ahead for both stocks, meaning that they're both going to track very, very similarly along the way. But once one goes up, the other is going to, they're basically going to stop one from going up higher than the other percentage-wise, and you're going to see the beta look different. So one is going to give you a larger return, while the other one gives you a fourth of that, or a, half of that, whatever. And then in between that range, you're going to see the other one go up, right? It's a time frame. It's going to be, depending on how they're playing the play, it's the same thing. This is what they did with crypto. Exactly what they did with crypto. If I bring crypto here, I'm bringing Ethereum Classic, okay? And we're comparing this one, okay? Because that's the one that TradingView calculates, okay? Same thing, right? We are tracking identical right now. We were not tracking identical back here. They ran up Ethereum up first, then they shorted it, and then they ran AMC up, okay? If I bring, and these are about a month apart, so if I bring AMC, this entire thing, right here to here, and I shift it over, you have the same points of interest, okay? I'm not changing the time or anything. Here's that peak, here's the projector pattern, here's the mid phase, okay? I'm telling you, dude, this is how they're probably doing it, man. Like, what would be the point of, these stocks doing that, trading each other basically to a T in the way that they look on the macro, but, in the micro here, days apart, they're literally, a month apart, and then they start to get really close to each other. And I think at some point they're going to break out. One of them's going to go, and then the other one's going to go after. All right, I went a little ham on that explanation, so I'm gonna see here what else I can answer. Sorry if I'm missing your question, just type it again. I will get to you, I promise. April. So the April scenario is a cup and handle scenario, okay? And I have multiple scenarios out, man, on purpose, because no one can predict the squeeze, and I am not perfect. I'm not going to do that. But the scenario would be a cup and handle here, okay? That would set us up on that $30 level right around this range to take us up. And that would only happen, dude, if we complete this cup and handle and they get that pressure enough to bring it up. Okay, that would be the only reason this would happen. That would be the setup, right? This takes about the same time frame as what happened back here. It's going to be very similar time frame. If I take this, right, bring it up here like this, see how close it is together? You got your drop, you got your mid phase, even right here. You got your rise, your handle, projector, boom. And it's obviously like this isn't a cup and handle at all. This is more of a, I mean, this is, you can't really, this is a flag is what it is. But you could have said before it happened that this was, you know, more of a cup and handle formation here on the micro. But it was a flag. It was definitely a flag, right? So, or a pennant, whatever you want to call it, you know. But yeah, you can see these very important points of interest, guys, are these right here, and these indicate and have indicated in the past that things do go up even if you stretch it and make it into a fractal, right? I was talking about this on stream earlier. You could have kind of predicted this squeeze, this run up. I don't know why I call it a squeeze. If you just took this little pattern back here, because it's hinting at you how they trade these patterns and make them into chart patterns that we're supposed to look at, right? And be like, oh, this is a cup, and then handle, right? But you can see that if you stretch it, you can see where things are lining up together. This would have been your projector right here. Now, you obviously have to make that right call and say, okay, well, we have a projector, we're gonna go up, you know? But there's a lot of patterns that you can use that with, man. I use it, I used it with this one too, that we were tracking. This is the one that I made not too long ago about this cup and handle, and it was a ×4 fractal, okay? It would have been like that. So it doesn't have to look perfect either, man, because you're tracking this, you know, on a smaller scale. So things are gonna look different for sure, because this is larger. But you get the point, man. There's so many you can find, and they're very helpful, very, very helpful. Have I been talking to Lou? No, I have not been talking to Lou, my guy. I have not. Okay. Have I peeped the silver cycle? I have peeped the silver cycle. Intraday, I believe, what I'm trying to understand a little bit more on the silver cycle is, or like how silver is tracking AMC, because like if we bring it up here, I mean, you can basically use any like silver, where is it? Right there. Okay. And I mean, there are correlations to it as far as like how it goes up. Like right here, you know, silver went up together. Back here was more of a steady move up, right? And it might have been used as leverage as well, right? These hedge funds, guys, you have to think about, it's not just one, it's multiple, and multiple hedge funds are going to leverage on whatever it is that they want. Okay, you could use crypto, you could use, you know, commodities, silver, gold, whatever. And if they have that capital to do so, they're going to be using, right, more commodities, because it's easier to probably provide that pressure to the upside, and maybe not as risky as they would think if they're going to do it with another play. Because some of them are like, you have to think about from a hedge fund perspective, they're the riskiest like asset managers, okay, hedge funds. And from a financial institution perspective, you know, there's multiple ways you can manage assets, and hedge funds are the riskiest, so they probably are using like crypto and shit, or like, you know, pump and dumps intraday to pump stocks. Like I remember, you know, back before we ran up, you know, they would in between what happened here in the flag, they would run up Clove, right? That one ran up and down multiple times, and we were always trading against it because, you know, it's like in the meme community, it was also a hype stock, and I think they would use that against retail to sort of psych them out. It's definitely using that against, and you would also get catalysts on the AMC like page, or on the AMC like Weeble would throw in that market watch. Like all of these news casts would purposefully like play other stocks and say that they were going to squeeze or whatever, so that they could keep that pressure down. And they're definitely doing that, and they're going to do it on the next run. Okay, you're not seeing that so much right now because the volume is, you know, very flat, very not a lot going on, because they're able to keep it that way. The institutions are able to do that. But soon, man, we're definitely going to get those. We're going to get those. You'll see them coming. Do I think we were supposed to run November 18th? Yes, I thought we were. That was my I wasn't streaming then. I had the cycle placed. I was tracking the cycle. I started streaming around this range right here. That's when I started to do YouTube. But personally, I had the cycle up, and the cycle here would have indicated projector pattern in this range. Okay, that was weird. I don't know how that happened. Okay, there we go. We're back. We're back in business. Okay. So, yeah, dude, I thought we were going to squeeze right here because this is the projector pattern. This is the pink pattern. And this was indicating to me that we came down, right? Created that little double top setup here sort of deal. Before coming back down and telling the algorithm that we're okay, and then we come back up and we set up to go up, right? That would have been perfect because this is a flag and it was well respected. But this was what they did. They used it against us, okay? This was a first psych out. This is what got a lot of people, including myself, to second guess themselves very, like, terribly. And they took that, to their advantage, and they shorted the stock. Where are these shares? Okay, where are these shares? Because this was, you can clearly tell, man. You can tell with a stock when things are being shorted. And this is one of those, okay? Not only can you tell in the way that the candles look and are displayed, right, back to back, but it goes hand in hand with the cycle because it's playing out inverse, okay? So those are the only two things you need to know, really, man, as far as like when we're gonna get these shares back, like when they're gonna throw these to the market. Because, dude, back here it was a different story. Okay, they did the same thing, but it was a lot quicker. They got it in, they got it out, they prepared. The projector pattern was ready to go. They opened up those 145s. Everybody bought them, and then they shorted the stock and they kept all the premium, expensive ass premium. And then they are repeating the process is what they're doing. So, it's important to note that, guys, whenever you start to see these contracts come into play, which we just did, we saw them back here. They opened up to hedge their positions. They opened up in half intervals. So there was like 20.5, there was 21.5. They started to open those up because they know that if they don't, okay, they're going to have trouble keeping the price down, okay? Because they're using the option chain to hedge their positions, to short the stock, to go long the stock. It's the only way they would open those up. I mean, think about how tight you have to get in this range. Just think about it. You have to get really narrow, really tight. The only way you can do that is if you add more options, and you have to add those half intervals. So yeah, dude, crazy shit. But hey, I'm whenever I see that projector, okay, the first signal is going to be not only the projector itself, but you're going to see options open up very quickly. On this projector, you're going to see, I believe we saw 77 and 73 open up around this range. And then after that, here on the 3rd, so when they actually shorted the stock, they opened up the 145s, and people were excited because, well, they're like, oh my god, I just got the 145s right here, I'm gonna be so rich. And then, you know, they fucking did this bullshit. I mean, dude, it sucks. It really does fucking suck, but that is literally what they thought was going to happen, and that's exactly what happened. So it's fucked up. It really is fucked up. That's why you have to play against the game, dude. Dude, I've learned my lesson, man, multiple times with how they're doing this, and it's very strategic, dude, to fuck with retail like hardcore. So you kind of have to play their game and be prepared. That's what I try and share here, man, in this channel, is to be prepared for the next run up, because when it does happen, dude, they're gonna do the same thing. They're gonna open up these shares or these contracts, and they're gonna try and sell them at really high premiums. So you just have to be ready for that. You have to be ready on both sides, really. Be ready on the long, and be ready for an attack, man. If they do bring it down, be ready for that too.
Members of the faculty and members of the student body of this great institution of learning.
Yeah, I don't have my green screen, so I'm using this like cloth right now. I left it at a vacation place that I was in for a little.
Such a large, concerned, and enlightened audience. There are so many problems facing our nation and our world that one could just take off anywhere.
Oh, really? Well, I mean, maybe we agree on something then, if he does have a similar theory that they're definitely storing these shares away, man. That's been, if you guys watch that cycle sessions video that I made a while back, it explains this, the entire, basically the way that the cycle works, how the projector works, how they're keeping these shares stored, and how they're using the option chain to do that and leverage their positions, naturally bringing the price down, man, the sentiment down with the option chain. You're almost able to, and it's crazy how you're able to do it, because what options like display is basically the ability to know the future before it happens, right? If you have an entire group of people going in on certain contracts by that expiration date, then you have, like, let's say a bunch of people buy expiration dates for, you know, this date right here, right? The 14th of January, and they bought them back here. Well, now they know that information. They know where you bought them. They know what strike you bought them at, and they have a lot of fucking money to be able to play with that too. So that's just, it's crazy how options drive the price of a stock. I always talk about how if AMC didn't have an option chain, we would have squoze. We would have had that squeeze, dude, a long time ago. Like, it's a lot easier to squeeze a stock without an option chain. Once there is an option chain, the actual money to be made on that specific stock is, you can't even compare it. It's a lot higher. There's a lot more money in the game after that. Mr. Simon, thanks, man. Thanks for the 10. Appreciate you, dude. Get yourself a beer, bro. Thanks for studying the charts all day and sharing your findings, dude. Fuck yeah, dude. All for you guys, man. I enjoy it. I love to share it with the world, and love to, yeah, man, just for you guys, honestly. It's all for you guys, dude. I appreciate that, man. Thank you. Okay, I'm gonna see here real quick. What do I think our next run-up will go to? Like the actual run-up? I don't have a price target, dude, man, for that, honestly. The only thing I'm gonna say is I used fib levels before this run-up happened, okay? because it was the same fib levels that happened back here. Okay, so not saying history is it's probably not going to repeat itself in that way, but if you take a very like similar setup here to the fib levels that were used, here you would have kind of predicted somewhere along this range of 15, right, would have been this run up. So if you apply the same logic to fib levels back here, I mean, oh, I just completely took that off. You have a very similar low to what happened back here. You actually have a lower low here. So it's a little different. But if you just extend that bar to where you had it before on that, then you would have got somewhere around that like $60-ish level. But that was just using fib levels. I ignored the fact that fib levels were going to play out. I actually thought that we were going to just squeeze and go, you know? I didn't think they were going to do this crap, but they did. They did. I definitely both lessons right here, guys, to be learned on that, because they didn't just do it once, they did it twice. And that's why you always have to be prepared for that next setup. But here, the fib levels that we would be looking at would be very similar, and it would be around the 280 range, 260, 280 range if they were to use fib levels, which, again, you have to think about how many people know about this, and they're going to play this psychological game, okay, to have the majority of people lose on this play. So whatever it is that they have in store, man, the majority of people, unfortunately, are going to suffer some way or another. And I'm saying this like in the way wherever it is that they really get on the play, because some people buy on the top, right, and they suffer the most. So it's important to really, you know, where we're at now. I mean, just looking at the stock and understanding where it is that your best risk is for this, whether it is that you're buying shares or doing options. You have to understand both too. Kind of like leverage yourself in a way where even if things cancel out, at least you're not in the negative, you know? IWK, thank you, man. Appreciate you. Yeah. Thanks for being here, dude. Thanks for being here and chilling out. Having a good time with you guys, for sure. Love doing this for you guys, man. So why don't you just buy like 9-month away contracts at like $30 and $40 strike and just sit back and watch the show? Well, it depends what kind of trader you are. That would be more of like a leap play. Leap play is longer than a year. So yeah, the risk is less for sure. But think about it this way. Somebody could have had that mindset back here, okay? They said, you know what? I feel like buying these, you know, really close contracts are a little bit too risky for me, right? So they say, I wanna wait at least 6 months, which is kind of pushing it, but you're still very far away from what's happening. So you buy, you know, the 145s for next year, you know, on what is, I believe is July 15th would be back here. I think it's July 15, or when is it? I think it's July 15 if I'm not mistaken, but don't count me on that. Let's say you buy these 145s, right? Well, you bought these back here. They probably costed you a hefty buck because you're trading at this price range. Where we're at now, okay, the theta has probably killed the premium. The volatility has gone down, so the premium also comes down with time, okay, time, decay, and then the actual value of the premium. So it's intrinsic and extrinsic value is losing. So if you bought these for, I don't know, let's say you bought them for like $5, right? You know, these 145s, I haven't looked at them, but they're probably worth somewhere in the pennies range, you know, below $1 for sure, like probably 20 cents or something, or less, or 5 cents. I don't know. I'm personally not looking at that just right now, because again, it's you have to be kind of on that setup. Remember, you get in my opinion, you get one grace period. And that is the projector pattern. The projector pattern is basically what lets you decide if you want to go in or not. This is why I believe that you're not really going to miss out, because this is very unlikely to happen. Something like this is not likely to happen. It doesn't make sense on a technical level, and it doesn't make sense from an institutional perspective either. You kind of have to set up and put pressure on them first, okay? Because they obviously don't want this to happen, right? The institutions that are long do, but they're gonna make money along the way doing so, and they're gonna freaking dry this up as much as they can, man. So once you have that projector set up, is personally what I'm looking at, is a good way to make that call and be like, okay, well, now that it came down, you know, this is looking good, like we're ready to go up. You know, we see this projector pattern everywhere. We see it on every single run up, okay? I'm gonna pull it up. We have it back here. And we also have it in the November run up. Okay? I'm gonna stretch them out so you can see what's happening. There's 1, there's 2, and there's 3. Okay? So if I put these back to back, they all have a projector. And this is the indicator that you get. This is the chance that you get to go in on the stock. You're not missing out. You're not. You get one chance. And I believe that that's the best way to do it. That's the best way to do it. It's just you're being safe with where your money's going. Even if volatility were to come up and you're trying to get in on options, because options are a really good way to make money. Like if you're going in on AMC options, they're really risky, but you're definitely going to make a lot more money with options, okay? And then leverage your share position on that as well. So with all the shares that you have, and then going in on options as well, you're not really gonna miss out, man, on something like that. So it's pretty cool. It's pretty cool. Just that we've seen that happen in the past. It's very likely that it will happen again. Tickles, thanks, man. My dude, appreciate you, dude. Get yourself another beer on me. You know what? I'm gonna drink all these beers, man, for you guys after this, for sure. For sure. I got it in my mind right here, man. Ready to go. Ready to go. All right, let's answer some questions. Yeah, for sure, man. Love it. Yeah, it's crazy how AA announced the acceptance of altcoins and the price didn't even flinch. Yeah, that's very true. Something I believe is that news and catalysts are made on very specific dates on purpose, and people that, you know, look at news and take it very seriously are typically the ones that end up getting the short end of the stick, because there's been a consistent trend here of bullish news being released on AMC, and basically not necessarily a short attack afterwards, but no pressure to the upside. And more pressure to the downside. There's been very few instances where it's played out to the upside. And that's the thing here, is that at some point, you know, even though this goes with the whole technical thing, where at some point the technicals will be ready, so will the catalyst. The catalyst has to be ready at some point, because they're going to use that to their advantage. Once they have and they pick the right catalyst, and I'm talking about these institutions, right? These narcissists that are lending out those shares to the little bugs, right? The little shorts, Citadel, Melvin Capital, and them. And then you got us, right? We're just like the little fish swimming. We just keep swimming, right? These guys are just trying to annoy us and shit. All right, so once they do that, it's really just some are gonna second guess themselves, right? Because, well, in the past, there's been a trend of just downward pressure on catalysts, but some are gonna actually win on that because it happened back here. Okay, it's the same thing. There's gonna be some sort of catalyst here that is going to bring the price up. And here we had we had earnings. We also had the Wanda thing, which, the Wanda thing, I'm sorry, the Mudrick Capital thing, that was really bullish as well. There was a lot that was going on here that they were using for this play. And it worked. But, dude, it wouldn't have worked if there was not that volume coming in the first place. So, yeah, dude, we'll get it. We'll get it for sure. We'll get that news catalyst, man. Crazy shit. Waffle. Hold up, your thing just went away. So how am I playing AMC right now then? Options or just buy and hold? I do both, dude. I used to be pretty hardcore just options in general. I love trading options like intraday, not specifically with AMC, but in the past, before AMC, it was more of an option play thing. So for like the SPY, I have a lot of different ways that I look at the SPY and how you're able to make money on options. But I think AMC personally, it's both, dude. Like, you can make so much money off of shares and options, but you can make a lot more money on options, in my opinion. But obviously, shares are going to be a lot safer, and it's the whole thing, dude. Like, it's buy and hold, and along the way, leverage your share position with options, because you could do both, dude. Remember, options are derivatives. They're not. They're floating in space, okay? They're not in, you could look at it that way, right? They're not physical objects that are here on Earth. It's things that are in space that will eventually hit the fucking Earth, right? At some point. That was a terrible analogy, but you get my point. It's like, they're not, unless they're in the money, right? They're worthless. Unless they're in the money, they're worthless, is what it is. So it depends on your strategy. There's a strategy to options for sure. And you just kind of have to learn that, man. I mean, at some point, dude, once this is all over, and I talk about this, dude, I'm going to focus on not only, right, AMC. Once AMC goes up and, you know, it's going to be over, I'm going to have to focus on something else. Even though I'm very loyal to what's happening here with AMC, I'm definitely going to be looking at a broader scale of stocks and, you know, talk about that with you guys, because I know there's a lot of potential to make a lot of money different ways. And I have a portfolio that I'm working on that that I have set aside for that, and you know, to share with you guys at some point, because it's a good method to do it. But right now, I think what you guys want, what the apes want, what this whole movement is staying very loyal to this and not really getting off track, you know, because, well, that's unfair. What's my status or thoughts on AMC touching single digits? So the only way that would happen, okay, I'm going to bring this parallel channel that we've been talking about here, this regression trend. I brought this up earlier today, okay, because this is basically, it goes hand in hand with this merging of cycles, okay? We're in a stage in which things are tracking very identical to each other, meaning that they're more on like the macro cycle of things. Like, you can look at it this way. When I say macro, it's just like, it means larger. The larger cycle versus the smaller cycle, which is the 62-day cycle. It's the original cycle that has been working for us this whole time. And you're going to see a lot of micro movements happening within that cycle, right? But here on the macro, we've seen a trend, okay, of very specific patterns playing out inverse to what happened in the past, right? Because typically what's going to happen is you're gonna leverage that time that you made and to make whatever pattern that it is that you're trying to do and play it out in the future. So that is why you see these playing out over and over again in the same way on very specific time frames. So if I bring back these are quadruple witching dates, okay? And you can tell that on quadruple witching, okay, these all have, right, they all basically come up. They're very volatile on the days before and the days after. The ones that we're seeing here, this one specifically, December 17th, happened to come up. It did come up on quadruple witching date, okay? So it was volatile. This was a very, very nasty spike to the upside. So same thing back here. You have quadruple witching, but this was a spike down right before that date. And then here you have your blue pattern, right? This entire pattern right here is a blue pattern. So these dates are important to look at because, well, if we're playing out this entire sequence and we've been playing it out inverse, right, mirrored, then you would have back here, as I'm tracking it at least, you can tell that the inverse is happening right here. But once you get to this green zone, this green arrow, which are coordinated because they're 3 months apart, exactly 3 months apart, you start to play out this rest of the sequence inverse. So now we're like, I don't know if you guys can see that, but that is what we seem to be tracking here on the 3-month cycle. You see that? And what does this indicate? This indicates upside right here. And the cool thing about this setup is that it goes hand in hand with the scenarios. It does go hand in hand with that cup and handle that we have going on, because this would be more, instead of it being like a nicer move up like this, where it's, you know, slow and steady, it was more flat down here, but more volatile towards the end. So I think what they're doing is, if we see some upside in the near term, it's going to be because of options, dude. They're gonna try and rack up the premiums like extremely high, because there's going to be a day that they're going to cover all these fucking shares that they shorted right here in the past. So it's not gonna look as, you know, as clean as these, you know, little short attacks, little, even though they're not, that we're seeing, right? This like, oh, it's gotta play out this way, you know, like very, very slanted. No, dude, like if we do go up here in the near term, it's probably going to be volatile, and you're gonna see multiple spikes up and down like that, creating, you know, this pressure before coming back down and establishing support at this level, right? So it really is just a waiting game. I've been waiting for this, dude, because right here, man, there is some shit going on, and once I get that confirmation, man, we'll talk about it. But right now, it's just stagnating. There's really nothing going on here. It's just very, very flat, and you can tell that they're really trying, guys, even though you can't see it, because in dark pools you can't see what's fucking happening, right? So, you know, they're doing it. Very little volume being traded here, and it's kind of hard to believe that when we just had really fucking good earnings. So just think about it that way. There's a big community on AMC, and the fact that the shares are being traded this way is just mind-boggling, dude. Yeah, still streaming, dude. Doing it, man. December 1st, are we almost completely identical, or is there a difference from October 11th to December 1st? Let's see. October 11th here. Yep, to December 1st. Yeah. From October 11th, okay? So this right here, this entire thing, it's actually going to be from October 19th, okay? It's not from the 11th. It's from the 19th all the way down to the 15th here, which is, oh, sorry, right here, which is going to be that 2 month, or I'm sorry, 3 month period here, right? October, November, or October, November, December. It's a 2 month period. I'm sorry, 2 month. Green to green, blue to blue is 3, and red to red is going to be 3 months. But anywhere in between, so you got, you know, red to green is going to be, and I'm talking about the larger red to green, is red to green. Green to blue is going to be 2 months. This is going to be following a similar setup to the cycle. Okay, so if we take this pattern back here and we flip it, mirrored, like this. Wait, did I just flip that? No, not flip. You mirror. Because here, what they gotta do here, man, on TradingView is they gotta do vertical and horizontal, because this is very confusing. Like, they're both technically flipped. It's just to which side, you know. Mirrored means that it's flipping it vertically. So you got this right here. You see that? How it's the same? Like, dude, I didn't even change the ratio. It's the exact same ratio, and it's the same. We're going green, red, blue, right? Same thing back here. Green, red, blue. And they're both 2 months. They're both 2 months apart. So that's the crazy part. It's like, I don't think this is a coincidence, man. Like, this looks the same. It looks the fucking same. So, again, this is a 3 month cycle. Okay, it works a little bit differently than the 2 month cycle. But they both do a really good job at giving us that price direction, man, where things are going. Am I from Cali? No, I'm not. I'm not from Cali, my guy. I'm from Illinois, Chicago. Booksy would flip, seeing you flip the bar pattern. Would he? Probably. I've been on Discord with the guy, and we've talked before, man. We've talked before. He's talked about his strategies and the way he does things. When I first started doing this, I was on a Discord within that group, within one of those groups, because I was presenting my thesis, what I thought about this whole thing. And yeah, everybody's got their thing for sure, man. It's very particular in the way I do things very particularly, and so does that group. Yeah, man, it's just, you know, similar ways in looking at the stock for sure, because Booksy goes more in depth about how the behavior of, like, how he sees the behavior of patterns relating to other patterns, making them fractals, right? Because what you're doing is you're taking a larger sequence of a set, and you're either shrinking it or stretching it out, right? I believe in my thesis is that there's a cyclical cycle that you can't pamper with, right? So it's something that's happening on a cyclical level with options, and within that level you have smaller patterns playing out, inverse or identical, because of what is happening. Like, you have to think about it with, like, your thesis. You have to think about why things are happening the way they are. And for me, my reasoning is that when you short a stock, right, you have to cover at some point. When you cover it and you're doing it strategically, right, as a hedge fund, typically if you're going to store these away, how are you going to release them in the future? Probably the same way you shorted it, right, to the upside. It's going to look very similar. So if that's the case, and they're doing this with options, right, because there's no more shares and they're leveraging themselves in the option chain, then it's really easy to sort of find out what's happening, especially if it's actually happening, guys, like in the way that these patterns are playing out. So yeah, very, very, like, just very similar way of approaching it for sure. Just maybe like a difference, I guess, in the approach, or not approaching, in the thesis. I'm sorry, the approach. Said very similar approach, just different thesis, I guess. Please help me. I'm in Illinois. I'm Illinois, really? For sure? For sure, dude. Hell yeah, man. Illinois is fucking awesome. It's my shit. I'm from there. I didn't say I live there. Okay. Wonder what would happen if you just look at all the evidence of this manipulation straight into the... Oh, dude, yeah, I wonder, right? Whistleblower shit. Well, I'm not an insider, so I can't. It doesn't count. Even though Gary Gensler was like, "Hey man, we got the Whistleblower program. It's really gonna help this whole thing crack it down." That's funny.
I'll get bored with you and feel trapped because that's what happens with me.
Dude, thanks, man. That's a hell of a compliment. I'm actually 24, but I'll take that, dude. I'll take that. Definitely take that for sure. Yeah, dude. Thank you, man. Jacksonville, yeah, dude. I wanna live in fucking Florida, man. Florida's fucking awesome. Florida is awesome. Hey, some parts of Florida are pretty cool though, you know? I went to, where did I go? See, I had a really bad, like, just picture in my, like, I didn't think, like, Miami was, like, the greatest place to, like, be or go to. But, dude, I went there, man, like, last summer, and just kind of changed my mind, man. Like, I do Miami, like, beach. Miami Beach, personally, that area is awesome, dude. So fucking cool. No, I actually haven't. I have not. I've been really busy, man. I went on I just came back from vacation, so I did not get to see Batman, but I'm going to see it this week. So I'm excited, man. I'm excited for that. What is this program? What is this program? This program is brought to you by It Cycles. That's what it is, man. This channel focuses on our market manipulation behind the scenes, right? What is happening, basically trying to crack it down. It really is. It's a theory, but I think it's a damn good one, dude. You know, if you're able to crack down on these patterns, kind of look at things from kind of goofy perspectives, right? Because you have your traditional approach on looking at a stock, and I say fuck that, dude. I say break the tradition and just do your own thing, because at the end of the day, man, like, you know, there is some shit going on, man, like in the markets, and we've seen this not only with AMC but with other stocks too. You know, crypto trading against AMC and leveraging, using against, like, all this stuff, dude. And the market manipulation is, like, in my opinion, it's real. It's just, you know, trying to understand it. And then, you know, the thing about this is kind of like the sad part is, you know, I think that they also have the ability to silence a bunch of people, and that's just unfortunate, okay? That you're being silenced to basically spread awareness. And that's what I'm trying to do, obviously. Like, I'm trying to tell you guys what I'm looking at. And if you agree with it and it's able to help you, then that's fucking cool. That's awesome. You know, that's what I'm trying to do. You empathize with people that think the same way. And, you know, I learned from you guys as well. You guys bring a bunch of good points that I'm able to look at and crack this whole thing. It's what this fucking community is, man. But yeah, you have the higher power just silencing your voice, so that it never plays out that way. That's kind of like the approach of the, you know, the society that we live in. You know, the 1%, right? And it is a capitalist approach. I mean, the thing is, like, I'm not saying I agree or disagree with capitalism at all. I'm just saying that I think it's taken, like, they're taking advantage of the system, right? A capitalist society it works, in my opinion, but you can't take advantage of it. And I think that's the problem, is that they're taking advantage of the system. Yeah, Minnesota's nice too. I bet, man. I bet. I've never been up. I mean, I've been close. Wisconsin, Wisconsin. Got some stuff up there. Mental warfare against their algo versus their algo. Yeah. Definitely. The algorithm learning, AI learning machine. It's not even them, dude. It's computers. They ain't smart enough. And we're fighting computers, man. But yeah, guys, I mean, it's really a waiting game, and we're close. We're close, man. We're approaching this date here, and I don't want to talk about how important quadruple witching dates are or anything with like options in the money or out the money, and that we're gonna squeeze or whatever on that date. No, not doing that. But it is an important date for these hedge funds basically. In the way that they're structuring these plays and these overall, technicals to play with your emotions, because that's what it is, guys. I mean, that's what the stock market should be, right? Even though it's not, right? Or at least I think it's not. Is that it's supposed to be trader sentiment here, but it's a computer basically hacking not hacking, but like making a way in which they're able to take your shares, right, and do whatever they want with them, right, in the short term and long term, to where they're making up this synthetic look of a chart that is playing out. So it's not retail sentiment, I guarantee you, is not playing out this symmetrical chart that is playing out to the upside and downside every single 2 months. Hell no. That is not retail sentiment. That is a computer. That is a computer doing it. And fuck that. Fuck that shit. Give me my money, bitch. Since the algo runs the show, what would screw up the algo? Volume, 1,000%. That is why we have the projector pattern, because not only do we get a second chance, but the institutions that lend out the shares also get a second chance. Why? They set up for it. They bring the price down. They set up to release all the shares that have been stored away, right? And they do it according to the option expiration dates. They basically set up for it. So the projector pattern is not accidental. The projector pattern happens on a catalyst or happens on a unexpected, basically, spike. If somebody gets margin called or something and then they release that news, it's going to be on purpose. Wherever it does land, it's on purpose, right? Back here, the projector pattern happened on May 13th, going into May 14th. Back here, the same thing. This projector pattern happened on the 15th, see? Going into the 19th, right? And back here, it happened even earlier in the month, and it was a lot smaller, obviously, because we're at smaller price level. So it's different when you're looking at it from the micro. But it's there, man. It's there, and you need volume is what it is. I don't know why they pushed in the past that volume did nothing to the stock. That was the biggest FUD, and it shouldn't have been told to anybody. It's simple supply and demand rule, man, with the stock, okay? You can only manipulate the system so much. Once you exceed the threshold, okay, you can do all the manipulation you want right here, okay? You could laugh it out and have your games, but once the volume starts to crunch in and you're springing up these shares and it pops and it exceeds the threshold a little bit, well, now you created the projector pattern, and now you have to release all of these shares, and throw into the market, and that is where you get the spike. So that is, in my opinion, how it works. And I've seen it happen in the past. I believe it's going to happen in the future. There's no reason for just the price to start running, man, for no reason, unless the only other way it would be if there was a, like, basically a market downfall of all these right, which is the other thing, right? If these hedge funds get margin called completely, well, they obviously have to close out their positions, and if they have positions in on AMC, if it's a short or long position, they have to close them. That would be the only other way that we would see a different setup on AMC, and that would be the catalyst right there. It would be margin calls. Now, whether the government steps in or the freaking SEC steps in on this and gives them time, which would be so fucking illegal, but what do we know at this point? Then they could theoretically make their own projector pattern, okay, and say, oh, these just got margin called, and we're gonna make a projector, and then that way we can set up, right? We can set up for our shit and give them time so that it doesn't look weird, and then they'll release the margin call thing or whatever, the margin call statement in the future, in the near term, right? So that it benefits the system and, you know, it doesn't affect the market, because that's what the SEC is going to do, is going to protect basically the largest corporations, because if you don't, then you have a complete downfall of a market, and they're not going to let that happen. Not financial advice. Wait, hold up. What's... not financial advice. If it's volume, what if retail bought shares even one at a time? Could retail stair step the price up? Then in return, this could create FOMO buyers. What you're saying is, like, if everybody, like, you know, hypothetically speaking, if people like coordinated like a buy or whatever. I mean, well, that would obviously you would need like an entire group of the entire ape nation, right, to do something like that. And first of all, that's illegal. So it wouldn't happen, in my opinion. Right? Because obviously, I mean, like, the likelihood of that is very, very, very slim. Right now, what the community knows, what has been engraved in their heads, right? And this is, I think we all play a part in this, and I think it's fine. I think it's completely fine, because this is what naturally will drive the price up for AMC, is the fact that we all are, you know, fantasizing, right? And I said this earlier on stream about AMC like going to very, very, very high levels, and I think that creates like this sort of like unnatural hype in the community, because most of us know, right? Most of us here know that this is not going to 1 million, okay? But the fact that these numbers are being thrown out there, okay, most people that are throwing these numbers out there also know that it's not going to 1 million, but they know that this creates this like imaginary hype in the community that's just natural. And it's like, dude, it kind of like, that's a good thing if you think about it, because like if you're like, you know, in the community, if you're hyping stuff up, you know, creating this hype, it's kind of good to overestimate it, but not in the way that you think. Like, you don't want to lie to somebody and tell them that it's going to go to 1 million. You kind of have to do your own DD. This is why it's very important to really, really consider your own DD and not spread any FUD or anything like that. Personally, I don't play in that. I don't say anything about us going to 1 million, or in this channel, it's very, it's very intimate in the way that I talk to you guys. Like, it's just this community is very, very intimate. And I know that my channel is not something that it, compares to the scale at which, Trey and Matt are doing things, right? So it's different when you're at that level. My level is, I've got you guys, man. And it's, that's just what it is, man. Like, we're doing this and we happen to kind of look at things a little bit differently. Like, we go very, very in depth in what's happening. Okay, my camera just died, so we're gonna do it without the camera. So it's, yeah, dude, that's just how I look at it, man. That's just how I look at it, for sure. But that it's Donkey Kong, man. That's the point, is that your shares, that's literally the point. We don't have any more shares that you can buy, okay? Even if things are being traded to one another, these shares are definitely being stored somewhere, man. That's the purpose of the dark pool, is if you can't see what's happening, man. And most of the shares are being traded through, and this has already been confirmed. Gary Gensler said this, okay? That most of the trades that are being sent in, man, are traded through the dark pool, different exchanges. So we're not going to be able to see that, and that's very unfortunate. But at some point, dude, these places, these locks that are being stored, you can only store so many shares in there, man, before things start to really pile in and not fit anymore. And I'm telling you, man, this is how they do it. But there's a structure to this. There is time to this, of course, but there is definitely structure to it. Like, you need to plan for it. And yeah, man, these little projectors are gonna be those, in my opinion, they're gonna be those little volts that are not, you won't see them yet. Well, you'll start to see them, and when you do, you gotta prepare for it, right? At the tail end of the last green pattern, is that a projector? Let's see. Which one? Oh, this right here? This would be considered a projector, yes. Because this one looks a lot more like what happened back here in January, okay? Because here, you've crossed, well, back here technically, you would have to bring this down. So if we bring this down here. Now, this is the thing, guys. The way I'm looking at it too, and this is why you have to be careful. Okay, back here, okay, the price was very different. There was no 77. Okay, you have to think about 77 here. It's very likely that we'll see a smaller projector take us to a level, and then we'll get a bigger projector. We'll get a larger projector. Like, maybe this is a start to it, and then the projector is gonna look something like this, right? And then this would be the projector. That's also a possibility because we're dealing with different price action. And, back here, we had this, right, this flag, this pennant that was playing out here. And then we build a projector, right? But this, if I take the same ratio, I'm not taking the, now I'm not trying to compare the patterns here. I'm trying to compare the ratios. So if we take, basically comparing like fib levels and stuff, if we take this like this, right? Stretch it out to like that range, the projector pattern would be right around up here, right? Because it goes hand in hand with, this point right here, the initial break up, and then the projector pattern is lying like right in there, and that would be considered more of a projector setup for actually going up to like squeeze levels, okay? But breaking out of this cup, your projector pattern would probably lay right around this. For me, the range I have, and this goes with the fib levels and the options that were taken back here. So this was a $12 level, would be the same as a $37 level. And I've done the math here. Okay, 37 like 40 something was that number. That would be the same as this projector back here. So I mean, dude, there's many ways you can look at it, but personally, I think there's going to be some tests going on. I think once you exceed this range, it's really, really hard, okay, to keep the price down, in my opinion. That's why when the projector comes up to this level, we're probably going to come back down here to this like $37 level before going up. And I think that would be a more realistic approach, for sure. And I was going to talk about how this would basically go hand in hand with the whole, you know, it's harder to sometimes predict these setups that are occurring, because it's kind of like looking at like Wyckoff too. And I've talked about this with Rico, man. Like, Wyckoff is awesome to look at intraday, because the flow is faster. Things are happening a lot quicker. Patterns are happening a lot quicker. So you can make a good call, a good play, and make money. But on the macro, it's really hard to tell where things are, okay? And it's kind of the same way I look at this cycle. You kind of have to look at them the same way, dude. The cycle is, also it's really good at giving that direction, to either direction, but sort of calling out when things are actually going to run up, because like you can prepare for what's happening here, but when things are actually going to run up, where we squeeze, I think it's a little bit hard to predict that, man, for sure. Alright, thank you, man. Tickles. Appreciate you, dude. Yeah, drop a like, man, if you like this stream, alright? Drop a like. Would appreciate it a lot. The algorithm would appreciate it a lot. And I fucking love all you, dude. Alright. Taylor wants to see some tendies because got some babies coming. All right, man. Hey, congrats. Matt Lags, yo. What up? What is up? For perspective, also, let's look at the previous, let's take a month, okay, from the past several quadruple witching dates, okay? So we have a quadruple witching date right there. We have one right here on September 15th. Oops. Right here to the 16th of August. And I'm just like eyeballing the time frame here, so bear with me. We have one right here, 20 to 20, okay? There's another one, and then right now, this is where we are. So we're gonna bring all these back here. 1, 2, and they're in order, okay? 1, or I'm sorry, no, they're not. I didn't even take this one, dude. This one's the 18th. This was a run-up to 18th, all right? Right there, and then one right here. Okay, so what do these all have in common except one? Okay, this one, which happened back here, is the only one that got shorted, okay, a month into it. Now, we're going to take these ratios, we're going to stretch them because it's not fair that I'm looking at all these the same way. I think these are the only ones that are fair to look the same. We're going to fit them to what these ranges are because, you know, this one's a lot smaller, but I guarantee you that the actual price range here that it went up is probably higher. Okay, we went from 7 to like 15. This is 88% versus from here, the low is only 60%. So see, this one's technically supposed to be higher, but you get the point. This is before quadruple witching, okay? And then this one, obviously, we're gonna change as well because it's the run-up, okay? These all happen before quadruple witching dates, okay? All of these, except one, this one. Now, if I flip this one, right, you have, again, this is the stage in which things play out inverse here on the 3-month cycle, according to what's happening here. And not only does this line up with the quadruple witching date a month before, but it also lines up with the cycle, right? Because it's playing out inverse. Okay, if I take this back here, quadruple witching date, this is the run-up, right? Look, from quadruple witching to the start. It's the run-up. So this actually is it's just inverse, dude. It's just inverse to what is happening. It's flipped, okay? And you're seeing those shares being shorted, leveraged on this specific zone. So my whole point here is, you know, on this range, okay, we really haven't had something similar happening the way that all of these have traded to the upside, except one, right? This one traded to the downside. We're gonna flip it. There it is. You could say that, you know, on this quadruple witching, we have right here, first, third, going to 18th, going to right here. This is the start of it. It's the only thing we have. The only evidence we have is right here, okay? See how it's weird? Kind of looks like this inverse, right? Yeah, it does. A little bit. But then right here, it's like not. You kind of get the point, though. So that's why I'm kind of waiting this out, because back here, okay, if we extend one more quadruple witching, see what happened back here. So this is the 22nd, and then quadruple witching would have been on December 18th. So what happened back here? A month before. 21st to 21st. 20 right there. Now we have this happening right there on quadruple witching, which is actually it's a short attack, just like what happened back here. Now it probably doesn't look the same because in the same ratio, similar, but not the same, right? Probably just this part right here. But this is just one way to look at their hedging happening before on those option expiration dates. They won't do it on the expiration date, okay? They're going to do it along the way. And that's why you see it 1 month before. It's typically a very volatile month. And it's more consistent than not, guys. It's only happened. This one, it counts as well. Even though it's a short attack, it still counts because you do have a lot of selling pressure. But right here, I mean, there's not really much going on. So we'll see, man. This might be one of those plays where it just it happens a little bit differently. Okay, this might be like a newer setup in the way that things happen. But if it does come down, I mean, again, this is not something to freak out about. It's extending the cycle length time a little bit more. But my conviction does not change. It doesn't matter if we come back down here, dude, and test, you know, single digits at 8 or whatever, and come back up. I'm still going to be looking at the cycle and the 3-month cycle and make my set up my conviction for the short term, right? When things do start to go up. Alrighty, all right, guys. I just wanted to do a just a quick, Q&A. Typically about an hour and a half is what I do here for these Q&As. I did go live today, but I'll be live tomorrow. If you guys want to join up in the morning, just make sure you come in, you subscribe to the channel. Make sure you join us, man, and hit that notification bar so it lets you know that we're live. All right, and we're chilling and we're throwing rockets in the chat and elephants and all that crap, all that good crap, So you guys have a good night. Stay convicted. Stay calm, right, as TMI says. And you guys have, go love your dogs, all right? Love you. Bye-bye. Peace out. Good night.